Polymarket-backed platform boosts funding to root out insider trading on prediction markets. That single number resets the market's playbook. The key question is not what happened, but what changes next for operators and users. We will map trigger, incentive shift, and downstream impact before the close. A trader who knew about a classified intelligence report 3 hours before it leaked. That's the problem Polymarket has been quietly wrestling with, and this week they just committed serious capital to solve it. Polymarket-backed platform just raised funding specifically to root out insider trading on prediction markets. This isn't theoretical. This is happening right now, and it changes how billions of dollars in bets are being made. Let's be clear about what's at stake. Prediction markets are meant to be information aggregators. When thousands of people bet on outcomes, the price becomes a forecast. But when someone with inside information can trade ahead of a public event, they're not adding signal, they're extracting value from everyone else in the pool. It's market manipulation dressed up in probabilities. The scale is massive. Polymarket alone does hundreds of millions in volume per month. Solana-based prediction markets, Ethereum-based derivatives, sports betting platforms, they all face the same vulnerability. One person with a leaked email, a boardroom conversation, or advanced knowledge of a regulatory filing can move the entire market before retail traders even know what happened. Here's what changed this week. The platform announced a funding round specifically to build detection systems. Think of it like this: if an exchange used to rely on post-trade audits, they're now hiring a team of data scientists to watch trades in real time and flag behavior that looks like information leakage. The funding means they're hiring compliance teams, building machine learning models to detect unusual trading clusters, and creating legal frameworks to identify and prosecute actors. Why this matters depends on who you are. If you're a retail trader betting on election outcomes or sports results, insider trading dilutes your edge. The odds you're seeing are already being moved by people with better information. If you're a creator or analyst building audiences around prediction markets, the credibility of the entire category depends on this working. If there's a systemic perception that the game is rigged, everyone leaves. If you're a regulator, prediction markets sit in a gray zone. The SEC has never given them explicit blessing, and insider trading is one of the few things that could trigger a crackdown. The global angle is sharper than it looks. In India, derivatives trading and betting markets are heavily restricted. But prediction markets are borderless. An Indian trader can access Polymarket or other platforms through VPNs. If insider trading becomes the narrative around these platforms, regulators everywhere, including in India, will use that as justification to ban them entirely. If the platforms clean up their act, they get legitimacy. Now here's the contrarian part. You might think this funding is a sign of market maturity. It's actually a sign of maturity only if it works. If the detection systems fail and insider trading continues, this becomes a liability. The platform just publicly committed to solving a problem that, if unsolved, might kill the entire category. What changes next? Watch for 3 things over the next 90 days. First, look for announced enforcement actions. If the platform discovers insider trading and actually prosecutes it, that's credibility. Second, monitor trading behavior during major news events. If you see unusual price movements in prediction markets right before major announcements, the detection systems aren't working. Third, follow regulatory statements. The SEC and CFTC are watching. If they feel the platforms are serious, they might grant clarity. If they don't, restriction or prohibition is the default. The second-order implication is what makes this significant for the broader market ecosystem. Prediction markets are becoming infrastructure for price discovery. They're used by researchers, hedge funds, and policymakers to understand probability-weighted outcomes. If those markets are compromised, the entire information system becomes suspect. This funding is an attempt to prevent that collapse. For traders and creators, the immediate action is simple. If you're using prediction markets, you now know the platforms are aware of the vulnerability and are actively trying to fix it. That's more than was true 6 months ago. Monitor the enforcement announcements. They'll tell you whether the fix is real or just PR. This matters because prediction markets are one of the few places left where you can get a real-time, crowdsourced probability on future outcomes. Elections, AI breakthroughs, economic indicators, sports results, the market price is information. But only if it's not corrupted. Polymarket's funding round is betting that they can keep it clean. Whether they succeed will determine whether prediction markets become standard infrastructure or remain a high-risk novelty. Watch the enforcement actions. That's the real signal. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.